The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show this Monday morning. And a couple of news events going on here. The Greek elections, obviously, that's good or bad for the euro. I think, people could be taking that as the euro actually may benefit if Greece pulls out, but they're considering, just fundamental talk here, considering, they're going to, or the talk is they're going to continue to try to renegotiate the euro debt. They got a $10 billion payment due in about 2 or 3 months. I don't know how a country like Greece would make that payment and make regular payments, but if Greece goes out of the European Union, that may actually benefit the euro, and the euro is actually a little bit higher than it closed on Friday right now. I'm showing gold, which is seemingly taking this news a little bearish. We talked about on gold, I'm going to go back to the euro in a second, do a little analysis on that, but we talked about gold having that little bit of a lid between 1295 and 1303 in there. Last week, we actually talked about it before it got up there, and now we've got an orange bar attempting to appear, which means if we go into our scanner, that pretty much painted the picture for us. We just pull down here, gold. Well, gold is, okay, right here. Orange bar attempting to appear. Here's our landscape view. And as we can see on the daily, looking at 240, on our daily, we're probably going to get some new profiles appear, more than likely, by the end of the day, and that will give us some new inflection points to pay attention to on gold. And silver is of the same mindset, so I'm going to bring that up too, just on the scanner. I'm going to pull up our landscape view and show you that in addition to that cell being orange or yellow in general, and things refreshing right now, so we're going to sit tight for a couple of seconds here. As this pops up, here's silver. See that daily yellow header up here, which is possibly going to give us some new things to pay attention to. We talked about that 1830 area being a little bit of a lid on silver, as well as the analogous situation with gold on that 1295 to 1303 area. So talked about maybe it's time to, we've reached some targets, sit tight, wait for some new inflection points to appear. And that's seemingly coming true on gold and silver here now. All right, so getting right into gold and looking at the shorter term picture, as you can see, that 1284 area was that kind of bounce, regulate the trade up, even as of Friday. But now we're getting below that 1284, 1285 on the short-term basis. So short-term traders can look to that as a little bit of a lid there to possibly contra-trade this down just a tad here against the long-term trend up. Now, as we get those new inflection points on the daily, those are going to be the more powerful situations to pay attention to. So, again, I think the theme is here to take a look at that after we get those projections on gold on the daily. Here's silver. Here's the weekly situation on silver. I'll kind of expand this out. There's that 1830 area, just like we talked about on the scanner. And the cool thing is on the scanner, I hope by tomorrow we'll see some paragraphs as you mouse over these things. It'll tell a little bit of a story in an automated fashion. And we'll just wait and see if the programmers can get those in. For anybody who's got the scanner, we'll get those upgrades. Along with, believe it or not, some real-time charts within the scanner. So we're going to have a button here you push, and you get actually a broad scale view on the charting situation, and each cell you drill down into, you'll also get that time frame with the inflection points painted on that time frame. It's going to be very, very cool, in my opinion. Been working on that. All right. So let's take a look at the euro, and I think we have Eddie on the phone. Eddie, you with us? Hello.
Yes, John, I'm here. Good morning. Good morning.
Great. Your voice sounds good today. That's awesome.
Yeah, I spent a fortune, John, and on the microphone.
Well, nobody's complaining about that.
Yeah, I hope I would look same well as I am sound. You know that. Yeah, what's on your mind, man?
I have that same desire also. I tell you what, I really wanted you on today because we got a little bit of a change in tone in the euro here, and you know, I wanted to get your thoughts here. I mean, I know the long-term trend is down. There's no question about that. This has been the gift that keeps on giving. But you know, you're kind of, you know, you're sitting in Spain. You got the papers, all the fundamental thoughts going on in the newspapers over there. What's your general thoughts on the euro as it pertains to the fundamentals and the Greek situation and the technicals? You could leave out all the fundamentals if you want to, and we can focus on technicals if you'd like. But I just want to get your thoughts on that.
I have a few words about the fundamentals. Yeah, it's like two drunk guys sitting in a bar and talk politics. That's what the fundamentals are. Because because price is going against fundamental, like reasonable pricings. You know, whatever you say, especially in currencies, ages, and somebody's tried to bet against it and say, hey, there's no rationale in this trade. The prices cannot be so low or so high. Hey, take a look at fundamentals. Yeah, they going, you know, they're getting in the body bags, and then you know, technicals are all reflect, our technicals reflects fundamentals. That means you have clear display of the profiles of the supply-demand areas, and that's how market participants act around those areas, or they recognize those areas and take as a resistance or so-called supply as an opportunity to trade, or if for some reason price goes higher, because many things, of course, actually most of them goes, you know, underwater, like hurdles, the research what we don't know, and the valuations of technical pricings of some issues. So again, fundamentals is not in the play. Technicals, yes, lots of new fundamental news. I've been listening to what you said to your listeners on your show, that the market is taking this as a so-called positive sign that Greece are maybe will not try to pay their $315 billion debt. Not dollars, euros. So it's about have 500 billion.
Right.
I don't think so. It's like good or bad news as far as this isolated event. What is getting counted there, and everybody's talking about, what if that would be like initiation or the beginning of the end of the European Union? You know,
right?
The message. That's what it's actually count, and that's negative. Yeah, we saw the like little dip on pre-market because that news about serious party winning the election, it came out on Sunday, and you saw immediately reaction on the Asian market, and it actually technically retested Thursday's lows. Now we're back into the Friday's, nearly Friday's highs. I don't think that any good news, fundamental or technical, it's there for the euro, and we're looking actually to find places where we can sell. Short-term, of course, that would be the short-term related trades, intraday trades. Longer-term profiles would lead us into the longer-term trade, into the longer-term direction. So,
that's some really good thoughts there. I've got the 240-minute view up on the euro right now, and as you can see, this 240-minute view has basically regulated the trade down since the 135.50 area on the euro. We're trading 111 last night. So we, the news came out. Obviously, we kind of didn't gap down, but we sold off, made new lows, and we've kind of reversed a little bit. Now the 240-minute inflection points, again, the daily no new box attempting to appear, the 240-minute inflection points, and we've pretty much explored, unless we've had profiles appear above price action on the way down, excuse me. We pretty much explored the entire fair auction on 240s on the way down, unless we've had that condition in itself. So right now, so that's a relatively wide range for a 240-minute box. Obviously, this thing's been volatile as heck. Do you think we've got a chance to explore the entire fair auction on the short-term 240s to get a leverage point up top again to sell at 114.36?
You pull out the words out of my mouth. I was thinking to say about how wide profile is, but you just mentioned before me, so there's nothing left to say for me. Wide profile constitutes wider volatility, and we expect the price to be choppy and a little bit with a wider volatility, unless new profile will fire. But we don't know about, John. We created the algorithm, you and I, but we don't know actually when that algorithm spits out a narrower profile. Until then, of course, which is a pretty far-fetched, I would say, target to the point of control of the profile. And as you can see, asymmetric distribution of the values of the profile. The center, it's very close to the top, right, to the top of the profile.
Correct.
The resistance. So we call it asymmetric distribution of the values. Well, 113.80. It's another 120 pips up. I hope that the price will get there, and I would short it. But if you look at the 60-minute chart and daily, as I said, we have no profiles. But you look at the 60-minute chart, we have even a greater opportunities to trade these things a shorter time frame. Somebody told me that trading currencies is just everything is a short time frame.
Well, I got to tell you, I've been messing around with this Nadex product a little bit, and I know you've been looking at it too. We had bottom of the box 60s and 240s last night. We'll talk about this right after the break. We got to go to the break now, folks, and Eddie's going to hang around with us, and we will be right back. Wait. Keep going. Okay. I think my clock is off here, so maybe we do have a little bit farther to go here. Okay. Let's see. Let me get an update from these guys.
Yeah, I have a chance to sport out with my new microphone, my new noise canceling microphone, John.
That's awesome. Let me see what the heck's going on here.
I should have bought a Lada. This is a cheap Russian car. Because of the price I paid for this microphone, it's the same as I would buy a car in the.
Well, I tell you what, I don't know. I think my clock's off here, so we're going to keep going. So last night we were. Now hear the music. We're going to be right back, folks.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I've got Ed Muniz-Catinas on with us from Spain. We were looking at our Euro on the 60s and 240s, actually, because we've got nothing to hang on to around the longer-term views. The longer-term views are still south. But, Eddie, I was going to say last night, I was looking at these 60s, which we're looking at right now, around, that 111.60 area, and then the 240s around that 111.60 area. And when we kind of got our head back above there and the news – should have, I don't know. The news was the news. I was playing around with this Nadex thing and just kind of bought a couple lottery tickets for a low-risk situation. And, little short-term blip trade against a long-term trend down seemingly worked out. I know you're playing around with that too, trying to gather some possibilities on some strategies with that product. But are you still there?
Yeah, I can tell you what I think. I'm listening what you're watching. What you do. Yeah, if you put up our scanner and you can select currencies, because I like to trade currencies, as you know, and I like to apply them for the Nadex, because Nadex actually is those currency options are very liquid, probably as well as other options on Nadex, on the binaries, right? So I selected, as you just said, one of them were candidates were euro dollar, right? And if you click on euro, okay, you got a currencies. Take a look at euro dollar. What do you see? I see at euro dollar, that's how my scanner picked me up. Weekly, 14 weeks below the distribution, 3 days below the distribution. Neutral on 40s, it's a gray, and price, as you can see, flashing at the top of 60-minute box.
Right.
Okay, there you go. So 60-minute box, since long term is weak, intermediate term is weak, short term is kind of sort of 240 neutral and a little bit bouncing stronger, then valuations of those currency, of those binary options would be towards favor of the trader, of the battery. So I picked, as you did and I did, I picked a bet that price will not stay specifically above that high of the box, and this box already, the week 60-minute box already for the 3 hours in there. So go back now to the chart and tell me, you know, what chances I had betting that price will not get prior 2 hours again above that price level. So that's how the binaries are, and also had a nice winning trade. If you go on a chart, on your regular chart, and go back to 60-minute distribution of the hour profiles. Yep. Here you go. So it's still, say, 3 bars ago, 2 bars ago, price touched but did not close above the box highs. So I selected the ladder. They call the ladders, right? Instead of striking prices, that price will not be higher than our red line, right? That's it. And,
yeah. What we're going to do based on
it was easy.
Based on kind of just circling the wagons with what Eddie just said, is we're going to have a kind of a Nadex version of this coming out pretty soon. That's just going to have Nadex products exclusively on one page, and actually, in my opinion, with the snap charts we're going to have with each time frame clicking on the sell. Hopefully it'll give you great inflection points, especially when they line up like that 240 and 60 situation down below. That maybe, you know, you guys can orient some trades around those inflection points on Nadex in general. This product's progressing every day. By the way, got more breadths in, and as you can see, these on the scanner itself, the DAX and the Nikkei are going in today also. So there'll be, I don't know, 12 to 15 breaths in there, which is really, really cool. Okay, so again, my clock's a little off. I'm gonna have to wait and hear the music to tell you when we're going to break. British pound, we gotta take a look at that one. Used to live.
You know what is interesting, John? Again, scanner picked up. Scanner picked up. Just a second, I had it. What interesting is a dollar Canadian dollar pair, and this shows me right now. Scanner again picks me up. The bottom 60-minute. That means long term is strong, intermediate term is strong, as you can see, right? Weekly is above 10 weeks above profiles, daily is 17 days above profiles. It's inside of the 240 and testing the bottom of the 60. What that means, in the long term strong trend, we are observing right now a little bit retracement. So the short term weakness and the long term trend strength. I always like to buy, and that for the scanner, you know, it tells you just flashing in your face.
I got to
be interesting trade. Yeah,
we're gonna hit another break here, and we'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I've got Eddie with us right now. Eddie, I'm looking at the dollar. You know, as you can see, there's just not a lot to glean information off of there. So the long-term trend is still up. Here's the 240-minute view on the dollar. Reached the top of the box and backed off of it, 95.775. Got any thoughts on this one?
Only on the short term. We can trade a little bit range here. Again, 240 profile shows us volatility, and volatility will be there. Market will be choppy, trying to find direction. Probably would be same risk reward opportunity as far as direction, picking direction, trading, selling highs of the top of the box distribution, and paying attention to the point of control of the center of this. That would be projected range of this particular product, would be the point of control, that blue line of our profile map, and the top line where the supply is. So that would be projection of the short term. Long term, of course, is strong. We need a little bit more, I guess, defined daily box, at least appearing daily profile, that we can have more information how to act with this instrument.
Right. So if somebody's long the dollar, which we've been kind of preaching that for a long time, there's, you know, from a long-term stance, there's really not a lot of reasons still to get out of this trade. You'd rather see some new, at least intermediate daily information appear on the dollar. That's not happening. There's no indication that that will be happening yet. And like Eddie said, all we've got to do is just glean some information off the 240s. And unfortunately, that 240 bottom of the profile here at 93.67 is well below our price. I wouldn't personally want to suffer that type of pullback to stay in the trade. That's just not the time frame and the give backs that I like to do on something, but to still be right, so to speak. But as we look at this, some trailing stops are probably in order on this product right now. You've got new shorter term supply happening, and that's just the situation on the dollar. Well, let's get right into what everybody wants to talk about as usual, the S&Ps.
Yeah, I might add to this product that at least consideration of the taking profits, taking off some of longs because of the appearance of the 240 profile and price being inside of the profile can be actually considered by managers or by traders, taking off some table, of the table, some long positions.
Just the sheer fact that the 240 has appeared and is sitting there. Yeah, I get you. All right, so here's the S&Ps. This is the way I'm looking at this, and I was kind of looking at the Nadex situation. And trying to figure out, strategies to try to take advantage of the volatility of the S&Ps right now. We've got this 2051, 2052 area up top that we talked about last Friday, which was the daily unfair highs sitting there, and now the 240s at the same premise up here, and you got this 2027 down below, which is a very powerful number. And I was just looking this morning at selling the 2050, I think it was 2051s on Nadex, and buying the 2027s, I think for a net collection of about 40 points, risking 60. And you've got a really decent range there. And those are based on two powerful inflection point areas. And when I looked at it, we were pretty much right in the middle of the range of that particular situation. And, again, that's risking 60 to make 40. But what's your thoughts on something like that, Eddie, and where do you think these S&Ps are headed?
Going back to the binary options, trading binary options, imagine yourself 1, 2, 3, 4, 16 hours ago, if somebody in the States or anywhere in the world would be able to trade, maybe some have, some have some little sleepless night or insomnia. Imagine when price dipped into the lows where they are, and into 40s, and the price level 216, as you can see, there were 216 on daily, were very close. You could have made a day bets on binaries, placing your bet that price will not end up lower than a 216 striking price, or the ladder, right, how they call it, or 240. If you pull the 240, that coincides also very strong, shows a very strong demand area, because the two profiles match their levels, inflection points, and that makes a double strength of that. So imagine that, placing the bet that price on binary options, that price will not be below certain level when the market dipped into 2020. Here we go. See that 223 area, green green line? Okay, that matches to the prior profiles, red line, actually to the tick. So when price was testing 225s, 226s, the appropriate bet on the binary options would be the price will not close at the end of the day. You can take even a longer time frame, the expirations, or in even an hour or 2 or 3, will not be below than 223, which is our strike price. And that materializes very, very, it's money in the bank. You can close that binary options right now. Probably there would be the price would be like next to nothing. So yes, there are some definite opportunities, since our tool is designed to predict, to anticipate where support resistances are or supply or demand areas are. And binary options actually trade the same. You have to pick the right channel for the very short time frame action. Lifespan, it's I more and more like it when we introduced ourselves to the binary options product. It's like match to match. It's, our product is built, I think, to trade binaries, in my opinion.
Yeah, and the more I look at it, I was kind of amazed when it kind of look at the inflection points and trying to trade, leverage on the Nadex around there. But obviously, the longer term view on the S&Ps, this 2027 area that we've talked about religiously, considering also the breadth of the scanner. I mean, as you know, Eddie, we use this to lean on heavily. You don't want to trade, in our opinions, against the dailies and weeklies. You don't want to try to trade against that too often when we've got it pointing in one direction, both of them coinciding. And as we looked at the 2027 area being the, when it migrated back above there and the breadths are positive, we got to basically go long the product at that point. We talked about the only way we could even do a contra trade last Friday was to get below 2052. And that actually worked out quite well. But now we're, again, breadth is positive, long-term trend's up. You got a lid around 2051, 2052, something you can lean off of probably during the day for a contra trade. But again, remember, in our opinion, even though this navigator on the weekly and the daily are showing divergences, you still got to pay attention to that breadth. And this is just a reason to look at the trade from the long side with suspect eyes. But again, long-term trends up, intermediate term trends up, the breadths are up, and you've got to take that for what it's worth. Now, some day trading, that's a different story. But again, that's the theme of the long term. Eddie, we got to take a look at gold really quick here. I'm sorry, we already looked at gold. I didn't want to revisit that. Let's take a look at something else. Let's take a look at the DAX. This is something else I had on the radar screen. And you're sitting over there. The DAX is a very volatile product. Here we go. The euro's climbing a little bit today. The DAX doesn't seem to care about that as far as repricing. Here's the 240s. I know you're a little bit delayed here. What's your thoughts on the DAX?
My thoughts on going back to fundamentals, like talking politics, but it has precedence with American stocks. When QE was just trying to be take a look what happened actually in the last 2 years with American stocks when American government or central bank was trying to have easy policy, right, like buying commercial paper. That's exactly what is happening right now with European stocks. Take a look. If you overlay the DAX, and the DAX just rallied, just sprung off, and even though it's S&P is not, and even though European economy is in a shambles, in a ditch, and no fundamental news. Well, cheap money. Money, yeah. And that they even went further. I don't know, European bank, they launching this QE program, is so-called asset-backed program, which I don't know what that is. Asset-backed, that means probably they have to go directly into the stocks to help an economy, some portion of it, not only to buying the bonds. Or this is fundamental and technical situation that, of course, European stocks should outperform any other, equity markets in the world, in my opinion, even China, because $101.1 trillion infusion into the 2015 as a European central bank promised, it's creating the environment of the cheap money for the whole year ahead. Technical, long, fundamental, long.
Yep. I agree fully, and here's a landscape view. We're above everything. So, and if you look at the scanner and do any filters for strong instruments across all time frames, you'll see the DAX pops up as numero uno selection. And my goodness, on every future, that's the...
It's difficult to trade this guy. We probably need to select something less volatile, less like cheaper product, maybe some ETF or something, because DAX, he can send you to the cleaners real quick.
Yeah,
your account has to be very capitalized, and it's volatile. Yeah.
Yeah, Nadex may be the only way to go with that particular product.
Yeah.
Yeah. All right. So we've looked at a couple of currencies. I actually wanted to go back to the Japanese yen, because this is something that, we've pretty much decided that we're only going to trade this from the long side when long opportunities are presented. And right now in the Japanese yen, we've got this 116.67 sitting down below, targets above 119.55, and any retracements now back into that 116.67 in our opinion, have to be bought. Right in the middle of a fair auction on this. And the 240s on the yen, again, we're breaking out short-term support 118.05. And as you can see, new box created, came back, hit it, retraced, and have used it as leverage to move higher. So targets above, again, on the yen are 119.55 right now. We're going to take, I'm going to throw the pound up, Eddie, and I'm going to just kind of let you take over on this one. Here's the daily. I know you're probably a little delayed there.
You're looking at the yen dollar here, not the pound.
Yeah, I just switched to the pound. You're still a little delayed as it comes up. Okay. You'll see the British pound come up.
Well, while you pulling up the charts again, movement of currencies are related. Nothing else but to inflationary situation of that country where they belong to, or anti-inflationary situation where they belong to. Right. Inflationary puts more actual weight on the market, on the currency itself, on the pair, and not weight, but actually gives them more value to it. Anti-inflationary makes currency cheaper and less attractive for an investment. Fundamentals recently on this bar down, we see that first red big fat bar down with a so-called strong weak energy bar down, which is close below the profile. That day it was announcement, not announcement, but it was a fundamental report that actually said that employment report last week. It was anti-inflationary. Therefore, we have still no projection and bake in that this particular currency will not, or the Bank of England, Central Bank of England, will not raise the rates very soon. Therefore, we have negative reaction. So negative technical breakdown below profiles and negative fundamental news would give us only idea that we would trade on the short side or the long-term trend, intermediate-term trend, unless price closes above 150.94 back into the profile.
Okay. Gotcha. All right. I was just making sure. I was checking something else here. All right. So a hopeful move on the pound back up into 150.94. We'll need to take a look at that as a resistance selling area with stops above, based on what Eddie just said.
If there's any money still left on the Nadex options for the day, the closing at the end of the day, that would be very safe bet if that price would close below 150.90, 150.90 for the day. That would be the bet.
Gotcha. All right, we got to take a look at the notes, my favorite product. And we got about 5 seconds here. So I tell you what, we're going to head to break in a couple of seconds here. I think if my clock's synced up, and it is. Great. And we'll be right back, folks, to wrap up the show and take a look at the treasuries.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. I've had Eddie on pretty much the whole time today. I'm taking a look at the notes and bonds to close here, Eddie. And we're going to take a look at soybeans just a little bit for me to rub in that trade. You still there? Hello?
Yeah, I'm here, John.
Okay.
So many buttons on this new device that I bought. It's some of them like I'm sorry, I apparently stepped on not even stepped, punched wrong button and got mute. Sorry.
No problem. You sound great today again. Okay, so here's the notes. Here's the 10-year, and here's the major inflection points. Just to restate those: 128.09 sitting down below, 130.20.21 up top. We're right in the middle of a fair auction on the daily, so long-term traders are going to have to sit tight. And here's the 240 situation. Isn't it kind of neat how magical this is sometimes on a short-term basis? We had that inflection point sitting around 130.06. That was a leverage point on the way down. But again, we're trying to avoid going short this product. And as we kind of start breaking down technically on a shorter-term basis, the 240s, we're looking for reasons to go long. So right now, the reason to go long on the 240s, and again, we just try to eliminate one side of the marketplace. The long-term trend is still up on these treasuries, and as wacky and crazy as that is, with the market seemingly making all-time highs all the time, the stock market, you just got to, again, just not try to make too much sense of that. 129.12 sitting down below, new 240 box. That's short-term support on the 10-year, 129.12. Eddie, if you see anything different here, you just let me know.
I could be objective listener here and give you my 2 cents on it. Why? Because I don't trade treasuries, I don't trade fixed income. Therefore, knowing that weekly profile, weekly trend based on profile and breadth is positive.
Sure.
Intermediate time frame, it's negative. Therefore, not negative, but neutral inside of profile. Therefore, in order to trade inside, who wants to trade inside of that daily profile needs to use, of course, shorter time profiles, which is daily 240 and 60. 240 and 60 clear trades where that's what you're showing. You're showing the daily, or you 240, right? What is it right here?
We got to get you in the den soon, but yeah, go ahead.
That's daily. There's the daily. That's exactly daily shows that the price is neutral. That means balance in the longer term. And 240 leads us, as you like to say, regulate us to the trade. If some wants to be proactive towards both directions of the market during the neutral market stance of the intermediate time frame, that means on daily, they have opportunity to do that using our 240 profiles. And yeah, that's what it would be. Selling below 129.11, if price closes, that would be the case. Short term, short trade, and going back to longs is above 129.29. That is simple, And profile is actually setting up right there for the trade. As you can see, 240 profile is inside of the previous 240 profile. That means what we call the giant wall. You step up of the wall, you walk, you lose a balance, and you drop. Therefore, what that means, price distance between buyers and sellers gets so narrow. That means buyers and sellers agreed to be in the neutral stance into the non-directional play at a so narrow price range. That breakout or breakdown will occur very soon eventually.
Yeah, so basically to summarize, we've got a very narrow box on the short term. We're inside profiles on the daily, long-term trends still up, and breakouts above 129.29 and breakdowns below 129.12 could be looked at as a breakout on a short-term basis if anybody's trading treasuries on a short-term basis, because of the width of that profile being relatively thin on an average basis looking back in time. We've got programs to find that. Eddie, thank you very much.
My pleasure, John.
Yep. Steve Rhodes is next. We'll pick it back up again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.